Okay, in this video what I wanted to do is analyze the Australian dollar daily chart and weekly chart to see if we can kind of come up with a consensus as to what direction the Australian dollar is likely in, or whether it's about ready to become a bullish trend or if it's likely to continue to be bearish. Now, what I like to do is I like to see how the markets have behaved, or how the particular market has behaved in relation to the indicators that I'm using in the past, and then I could use that information as a kind of a tell as to what is likely going to occur in the near future. Now, in the Australian dollar, if you look at the weekly chart, we know that we're expecting a weekly swing bottom for this week. In other words, this week ends today in another 45 minutes to be exact. It's currently 3:15 p.m. here Central Time, U.S. And you can see that it's already one bar late of when it was expected. Now, it's in oversold territory, which is a good sign if you're going to be looking for a weekly swing bottom to occur. But there are things here that has me concerned, and let me show you what concerns me. The first thing that concerns me is looking at the MACD. Okay, you know, when I'm looking at a weekly swing bottom in the MACD, what I like to see is, well, let me just point out a few things. Okay, I would like to see either that the MACD is extremely in oversold territory, such as you see with this histogram right here, and now starting its way back towards the zero line, which is this line right here. And you can see that right here would have been one good place for a weekly swing bottom. Okay, is this time period right here. I like to see this upward sloping happening right there. That's telling me the lines are coming together and we're starting to work our way up. And especially if you look at the signal line right here, or it's actually the MACD line, I should say, right here, is when it starts to curve up. Like you can see right there where my arrow is, my cursor. Once you see this starting to curve up, not sideways, that's kind of an early warning, but then you see it broke down here. But I like to see it start to curve up, and it did right there. The first time it curved up was be right there. That's when I start to look around here for, okay, am I getting a weekly swing bottom opportunity here? Is there a W date? Are we in oversold territory, etc., etc.? The other area that I like to look is when it actually officially crosses above the zero line, and that will be when the MACD crosses above its signal line, as you can see here. Okay, so those are the two things I really like to look for weekly swing bottoms. And then as the trend continues up, you can check for weekly swing bottoms as this starts to rise away from the zero. That's fine as well. But at some point you have to be concerned that you're coming to the end when it starts to peak out like you see right here. Okay. What I don't want is I don't really want to see potential weekly swing bottoms when we're still, let me get that out of the way, when we're still moving counter and we're in that bearish flow here, moving towards the zero line, but yet we're a good distance away from the zero line. It is very common for the MACD histogram to be bearish, or I should say could stay in above the zero line, come all the way down to it, and then bounce back off and continue higher again. That's very common. But right now we're looking for a weekly swing bottom, and look, we're well above the zero line. This is just a point of concern. It doesn't say that we can't have a weekly swing bottom. It just isn't really, it just doesn't really scream to me as high probability as these that I had already pointed out to you. Okay, that's a concern for me because right now I'm in a more bearish mode here, and I would like to continue being more bearish until it gets a little closer to the zero line at the very least before it starts to bounce back up again. Okay, that's one problem. Now I come over here to the daily chart, and I'm going, okay, daily chart, are you going to like remove this concern that I have? Well, when I come over here and I look at this, and for example, I plotted on this chart a 10 simple moving average and a 50. Now, how I choose my moving averages is I will experiment until I find something that is giving me a good read on the market. And I verify a good read because I simply just go back into the past and I look at how it behaved in the past. And what I have noticed is that when the 10 reaches the 50, it normally follows through. And I also noticed that when it follows through, so does prices. And it tends to stay for at least a week or so or more in that direction. Okay, so whenever I see this break, I'm expecting prices to follow through. And you can see that for the most part, that when we hit the 10 to the 50, it tends to follow through. Now here was a bounce. I call this a bounce off because it didn't really go that deep below it and it bounced off. And over here is a real good bounce off. And so I asked myself, well, are there any tells that would suggest to me that the 10 would likely bounce off as opposed to follow through, which it normally does, it usually follows through. And there was a couple of things that I kind of noticed about the bounce off. Number one is that, like, for example, here it didn't really bounce off, it actually broke through, but look what happened is that shortly after it broke through, price started closing above it. Well, once price started closing above it and it closed above both moving averages, that pretty much told me that this is a shallow depth situation. But then I also come down here and I notice that we start to cross above the zero line on the MACD. You can see on this bounce here, as price moved down and started to touch, price was already closing above the two lines, which was a dead giveaway that the 10 was likely to start pulling up to follow price. And again, you can see that the MACD was crossing above its zero line. When we had a situation where price came right down here like we have now, and you have to ask, well, is it possible that it might bounce off like it did here? You'll notice, though, that the MACD was not in a situation where it was crossing from above to below the zero line like it did back here, for example, or back here when it crossed above. You see, we would be expecting, if this was going to bounce up, we would be expecting that the histogram is moving from below to above the zero line, and that was not the case here. So we can see that the follow through, which is what it normally does, happened. And again, we can see that once it touched the line here, we did not have that situation of the crossing over of the zero line. That follow through occurred. Okay? And here, same thing. We got follow through because we did not have the MACD situation, and that turned out to be a really bearish move there. Okay? Again, you know, we see the same thing happening here. Okay, price was already closing above the top. That was a dead giveaway. And of course, you know, we were not breaking through the zero line here. So that brings us to here. And the question is, okay, we can see it's already starting to break below the 10 is already below the 50. And we see that prices are closing below both moving averages. We do not see any indication on the MACD that we're likely to bounce. Because remember, we would be looking for prices, or for the indicator to start breaking above the zero line on the MACD as a kind of hint that we were likely going to bounce off here. This suggests to me that in spite of, even if prices were to move up a little bit, that we are likely going to see lower prices in the Australian dollar if this tell works out as well as it has been in the last several months. And it has been quite consistent. Yes, we're in oversold territory, but then again, here we are in a situation where we have a potential lower swing top for this F date. Prices could easily go down to this next F date over here. MACD certainly supports it, and this moving average, the 10 moving below the 50, certainly supports it, and it's suggesting that we may have a follow through, or at the very least a shallow dip, which means that we would have prices moving lower for at least a little bit, a few days, before starting to close above both moving averages. Now, how can we have both a confirmed weekly swing bottom here and for daily prices to continue lower? Well, that is quite simple, because in order to confirm a weekly swing top, all that is needed is for next week to simply either equal or exceed the high of this week to confirm this as a weekly swing bottom. Or it doesn't even have to do that. If it makes an inside bar, you'd have a pause bottom. Well, here, yesterday, 93.69 was the high of the week, and right now the market is about ready to close in 25 minutes, and if it closes without moving above 93.69, then that's going to be the weekly high that needs to be exceeded next week. It just needs, next week only needs to make an equal or higher high of one or more ticks, and then it can continue lower. And you would have yet a confirmation of that weekly swing bottom, and at the same time, we could still have prices moving somewhat lower, maybe not a whole lot lower, but somewhat lower next week. And so we don't want to get fooled into thinking that the Australian dollar is ready to start rallying, even though it may be, it could be. But I'm showing you here an analysis of where we have tells and where we're dealing with probability, and and just the fact that the 10 is moving below the 50, and we know how prices normally behave when that happens, okay? And also we are in a short-term bear trend here as well, where we're making lower swing bottoms and lower swing tops. So we're still technically in a bearish mode here. There is nothing here that says we need to be in a bullish mode yet until we see a pattern form to put us into that mode. I would caution looking for a buy right now, and definitely below these two moving averages, in spite of our expectation of a possible weekly swing bottom, because it may be very minor, and then once we get a price just going barely above that high, then it can just continue on even lower to the next weekly F date, which is at the end of this month, and it would go along nicely with the direction of this MACD. So right now, I'm just not really that strong on the bullish side. I tend to be bearish the Australian dollar based on this evidence right now at this moment. Thanks for watching.